Imagine investing 10,000 rupees in a stock and watching it quietly grow into 10 lakhs over 20 years. No trading hustle, no overnight gamble, just patience. This is not a dream. It's the story of 100 baggers, stocks that returned 100 times the original investment. And in today's summary, we dive deep into Christopher Meyer's 100 Baggers, a study of how average investors created extraordinary wealth, not by doing more, but by holding on longer. Let's explore what truly makes a 100 bagger and why most people miss them even when they're holding one. 1. What is a 100 bagger? The term 100 bagger means a stock that multiplies your money 100 times. If you invest 10,000 rupees in a 100 bagger, it becomes 10 lakhs rupees. And yes, real examples exist. And Meyer didn't rely on theory. He studied 365 plus historical stocks that achieved this. He asked one big question: what made these companies grow 100 times? And could we spot them early? 2. The power of compounding time. Most of these companies didn't deliver 100 times in a year or two. They took 15 to 25 years on average. That's the first secret. Time in the market beats timing the market. The 100 bagger journey is built on compound returns, year after year, multiplying silently while others chase short-term highs. Meyer calls this the coffee can portfolio mindset. Pick great stocks, put them in a virtual coffee can. Don't touch them for decades. 3. The traits of a 100 bagger. Meyer identified specific characteristics common across all 100 baggers. Let's break them down clearly. A. High return on capital, ROCE. These companies efficiently reinvested profits to grow faster. Example: a company that earns 1 rupee and turns it into 1 rupee. 50 pays next year, again and again. B. Long runway for growth. They were in expanding industries or had room to scale massively. Think early Amazon, Page Industries, or Titan in India. C. Owner-operator mentality. Most 100 baggers were led by founders with skin in the game. They didn't chase quarterly numbers. They built with heart and vision. D. Low valuation at entry. They weren't hyped. Many were under the radar when investors bought them. The big returns came after years of growth, not on day one. E. Longevity plus patience. Investors who saw 100x returns were those who held on. Even great stocks crashed 30 to 50% sometimes. But the real wealth came from doing nothing when others panicked. 4. Why most investors miss 100 baggers. Let's face it, many of us already bought great companies, but we sold them too early. Lack of patience, selling after 2x or 5x, doubting during market dips, chasing the next shiny stock. Meyer's research shows people don't get rich by being smart, they get rich by being still. 5. Real-world 100 baggers. Here are some famous 100x stories Meyer shares. Monster Beverage, from 10 cents to over $50. Amazon, 100x returns from early 2000s. Apple, from forgotten tech stock to trillion-dollar company. We can also draw parallels to India. Page Industries, Jockey. Titan Company, Eicher Motors, Royal Enfield. All delivered massive long-term returns, but only to those who held for 10 to 20 years. 6. How to spot a potential 100 bagger. Checklist. The company earns consistently, has a large growing market, founder-led or visionary leadership, low debt, high reinvestment, reasonable or low valuation. You understand the business. You're willing to hold for 10 plus years. Simple? Yes. Easy? Number. Because the hardest part isn't finding them, it's holding them. 7. The mindset of a 100 bagger investor. This book is as much about psychology as it is about finance. Most 100x investors didn't check stock prices daily. They understood the business, had conviction, and ignored noise. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. You don't need 100 stocks. Even one 100 bagger in your lifetime can change everything. 8. Final thought. Be boring, be rich. Meyer says, real wealth creation is boring. It's not about action. It's about belief, plus vision, plus sitting tight while the world distracts you. 100x returns are possible, but only for those who give up chasing hype and start chasing depth. Maybe the next 100 bagger is already in your portfolio. The only thing you need to do is hold on. If this summary gave you even a small insight into long-term wealth building, do consider subscribing to Book Situation. It truly motivates us to keep bringing more such powerful ideas to your screen.